Hi, welcome to the Market Alert for Monday, the 27th of November 2017. After the last 3 days, so Wednesday of last week, Thursday, Friday, Thanksgiving, all out of the way. Cyber Monday today, just to finish off Black Friday. So we'll see what the markets do. Moment fairly quiet as far as the pound and the Dow is concerned. You can see there in the pound in the daily, the market's trading up to the 133.37 level there. You see this resistance here. A market slightly off this on the overnight there. So a bit of just remove these just to tidy things up a bit. So the pound started to show some sort of uptrend, but like I say, this resistance here is where the market sold off before and then double bottomed down here as well. So have a look at the news for today. Well, we're here. Haldane is speaking, and new home sales for the US, and then Kashkari is speaking at 10:30 p.m. obviously this evening after the markets have closed. So a quiet day on the news to get things back on track following the Thanksgiving holes. In the Dow, Friday, you can see just the half session there as the market then went into decline, and then the overnight Sunday session, the market sideways here, trying to move back to the upside there. So again, in the daily chart, you can see the market's starting to put in lower highs, which is interesting, apart obviously from this day, this one here where the market bounced back, but overnight showing some resistance here. And also the good news here is that the market's actually put in a retracement. I'm just going to draw in this for you, because if the market closes below here, let me just see if I can make this, let me just get rid of some of the lines. Let me just remove the support and resistance ones. Let's do it this way instead, and close that. And so it's just cleaned it up a bit. What we've got here is a situation where the market's come down, gone up to the 76%, managed to go through, create a double top type of thing, just a couple of pips off or points off, and now we're starting to see the market do this. And this 50% area is crucial, because if the market goes through there, watch this area here, and then that's the way it goes. But at the moment, the market is struggling here, failing to come back and close convincingly. I know we've had the Thanksgiving weekend, but no volume around, which you'd expect. But failure to do this, it's definitely a case of you will see the market doing that classic pattern, coming back up, failing, and then moving to the downside. At the moment, the moving average remains green at this time. So a quick look at the implied before concluding. So the implied volatility moving up slightly, 804 to 859, which you'd expect. Bit of uncertainty over the last few days as the markets trade sideways, just in case something came out of the blue. So you see the implieds moved up slightly there. So again, we'll see what happens. Brilliant article the other day, by the way, in Zero Hedge. Let me just find it for you about the volatility. Yeah, great article here from Citi. Citi warns of volatility surge as its macro index crashes near record low. And as it also goes on to say, early today was Goldman's cross asset team, which looked at the historic collapse in equity return correlations. And here you can see, and it's the lowest since 2007. And you can see there that we are now entering a situation where the volatility correlations are back down to the levels they were in 2007, before we had the 2008 crash there. So it's going to be interesting to see how this pans out. And it says here the warning came just as the VIX plunged to under 9, the lowest intraday print in a decade. And shortly before, Citi released an ominous warning of its own, in which it looked at the bank's proprietary macro index, risk index that is, and observed that a 6-month consecutive monthly decline in the risk aversion has taken our macro index to extreme lows, As it says there, readings below last Friday's 4.1 only been observed on 31 days since 1997. And again, you can see this here. So, I mean, we are due for a correction in the market. There's no doubts about it. But when they keep selling the volatility futures on the CME, it's certainly going to be interesting to see how they're going to allow the market to actually correct. But of course, once one starts selling, the rest will follow suit because they want to be out, a bit like lemmings. They'll all follow each other. But yeah, very interesting chart there. So you can see we've got this low in the index of correlations, lowest since 2007, before the 2008 crash. Right, that will do it for this one. If there's anything to report, I'll let you know. Obviously, the market's getting back into the groove today, and let's see what happens. As ever, thanks for watching. See you in the next.